Good morning, Chattanooga. You're listening to Real Estate Today with Cindi and Jody with Richardson Group, KW Cleveland on Talk Radio 102.3, The Talk Monster. This is the show that gets you caught up on all things real estate. Whether you're looking to buy, sell, or invest, this is the show that you need to be listening to. If you have questions, we have answers. 267-1023 is the number to call or text. Also find us online at rg423.com on the Richardson Group YouTube channel. If you have real estate questions you need answers to, we are here to answer them. Call or text 267-1023. We're also live this morning on Facebook on the Richardson Group Facebook page. If you happen to have a question that you would like to discuss off the air, you can call our office at 7979, and a member of our team of experienced realtors will be happy to walk you through any of your real estate needs. As always, I'm joined with Cindi Richardson. Jody Gatlin is not here today, but we have a very special guest with CMG Mortgage, Miss Angel Sherlin.
Good morning, Angel.
Good morning.
Thank you for getting up so early. And
Because that makes me old. Of course, you and I have known each other
yes,
for many years.
Yeah, we have been doing this for a couple of decades now.
Yeah. Yeah, we don't want to talk about that. But.
Right. That's what I was trying to find a picture, an old marketing photo I had of myself back from early years the other day, and I could not find one on the internet because apparently the internet was not a big thing back then.
No, we didn't have the internet.
No, I can remember when I got my very first website. Yeah,
we barely had printers and copiers.
We used those things called fax machines?
Yeah, they were big back then.
Mm-hmm. And you had to actually take original paperwork over to everybody.
Yeah, and we had, what was that, carbon copy? You remember that?
Yes.
Put it in between the papers?
Yes.
If you messed up, oh my gosh, you got to start all over 4 times.
That's a lot of whiteout.
Yes, we don't even have those anymore. No, I found one in my bag yesterday.
That's right. Not sure why you have whiteout, but you have whiteout.
That bag is about 20 years old.
But yes, Angel has been in the mortgage industry in this area for 20 plus years. So you have seen a whole lot of markets. You have seen good markets, bad markets. You've seen a lot of different things.
I have been in it since the late 90s. So.
And what are we hearing for the predictions for 2022?
Well, 2022, the Fed is saying they're going to raise the rates, and supposedly by the end of the year, we're going to be at about 4% on the interest rate. So they're going to raise them 3 times is the prediction. Mm-hmm. They said it's going to be a 60% increase or 60% chance by March. So probably, I'm just guesstimating, we'll probably be looking into the mid 3s on interest rates, which are still great. I started business. We were
in the 8s.
In the late 90s. It was like 8.5%, 9%.
Right, and that was normal then. That was good. But what you've got is a whole lot of younger generations that have never known the interest rate to be over 4 or 5%.
Right.
So that is very different to them. And then even some of the older generations, I mean, they have seen it as high as 18, 19%.
That's right.
So, we have really been spoiled with the low interest rates over the last few years.
We sure have.
Now, when the feds raise the interest rate, how does that look to consumers? What does that mean to them? Because when they hear that the feds are raising 1 point now, to me, 1 point would mean if we're at 3% interest that we're going to 4% interest. Is that accurate?
Not completely, because what happens is the federal funds rate is the rate that the banks actually lend from. Mm-hmm. So when you hear it say it's only going to move a quarter, then that maybe only move it maybe a half to 1% on a scale between 3 to 4%.
Okay.
So when the banks lend the money from the Federal Reserve, then it's not going to be a 1 to 1% interest rate change.
Okay. So a 1% Fed hike would equate to about how much of a mortgage interest rate hike? Ballpark. I know it's not exact because there's a whole lot of things that go into that.
Well, they're only going to move them. They typically, within the past few years, they've only moved them a quarter. Mm-hmm. So when they move a quarter, then you're only looking at like a half or, 0.5% actual interest rate to the consumer.
Okay.
So they raise them usually in 0.25% hikes. So you'll see this year, like let's just say, for example, right now, interest rate's 3.25 on a 30-year fixed rate.
Okay.
When the federal fund raises it a quarter, then you're going to see like 3.5. Then they're going to raise it another quarter. You're going to see 3.75, and then eventually we're going to get to 4% probably by the end of the year.
Okay.
Now, what that does for consumer is it lowers their buying power. So let's just say on a $250,000 sales price home, that's going to lower their sales price to about $220,000. So about $30,000 difference in what they could afford
based on their debt ratio.
Based on their debt ratio, if they're maxed out, you know what I'm saying.
Right.
So now they would only be able to afford $220,000 instead of $250,000.
Okay.
As an example.
And you're saying that we might see this first hike in March.
In March, they said there's a 60% chance that will be in March.
Okay.
Not talking into the mic, sorry. I got scolded.
getting the look there.
Yeah.
Okay, so if their buying power is decreased, then in all reality, Jack, that could push some of the buyers out of the market, couldn't it?
It's very possible, yes, depending upon where they're at, what they have going on. If you're going to start seeing those rates go up, you're going to get into a lot of differences on what you can actually afford on that monthly payment. I think that can be a big impactor for a lot of people, because really when you buy, you're actually looking to fill a budget. So it's what is that price point going to be that's going to keep you inside of that budget that you've already established that you're used to paying, whether you have rent or you have a disposable income that's earmarked for a mortgage payment.
And just for example, I want y'all to know that usually about at a $250,000 sales price, if you increase that rate by 1%, it's about $100 difference in payment.
Okay.
So if the rates go from...
Now say that again. If you increase the interest rate by how much?
By 1%. Then your payment goes up about $100.
Okay. That doesn't sound as bad then.
It's not. It's not as bad as it seems.
Right.
It's just the payment goes up slightly and your buying power goes down slightly.
Well, and that actually might help a few of the buyers that because if it does take some of the buyers and the people that were kind of on the fence on whether they could buy or not, it's going to knock some of those buyers out of the market, and they are going to become renters, which means it might help loosen up some of the activity you're seeing on the affordable housing, the entry-level housing.
That's right.
So, and then Jack, how are we looking on market inventory right now? Talking about bidding.
Market inventory is still historically low. I mean, according to the local MLS this morning, Chattanooga area only had 2,175 homes available on the market right now, which is a good number overall, but in compared to what we've seen over the last several years, it's a pretty historic low. We saw last year, I mean, we had Chattanooga area 12,870 homes sold for the year. Comparative years, that number's been up around 20. They're still moving very quickly, but it's going to be in comparative to what's actually out there, what is coming on, going off. They're coming on the market and going off just as fast as each other. So that historic sitting number's not gone up. You're not seeing homes stay on the market, a week, 2 weeks before they go under contract, to where used to they would be on for a month or two. So that change has really helped keep that total inventory number very low.
Well, and if I'm thinking of selling my home, then now could be a good time to get it on the market too, just simply because inventory levels are lower, and that is just in a normal market. Inventories are always lower in January and February. So if you're competing with less homes, then that is also going to help get your home sold for more money. So with the inventory levels being low and it just naturally being that time of year, now's not a bad time to put your house on the market. And what kind of price increases have we been seeing over the last year?
The price increases have moderately held to what the standard normal has been year over year, which is around 3 to 4%. We've seen a big spike recently due to the demand of multiple bids, cash buyers, things like that have elevated our pricing above the national average to an extent. But the biggest thing that we're seeing is that slowdown of, we're not seeing homes that have 6, 7, 8, 9, 10 multiple bids on them. we're starting to see more 2, 3, 4.
Right.
There's just been an
Where your
overall
home was
slowdown.
selling in 10 minutes, it might take 10 days now, and you're probably not going to get 10 offers. You may have 2 to choose from. Is that what I'm hearing you say?
Yeah.
Yeah. So, and again, that's not a bad thing. And I think it's just been a matter of time before the feds did increase the interest rate so that it did slow the market down a little bit too, because as the market continues to go up, I mean, that's just driving a whole lot of things.
That slows the inflation too.
Correct.
Yeah.
Yes. So, I
It's
mean,
a correlation.
right. So, I mean, we really do need to
So it's
raise
not a bad
the interest.
thing,
Right.
really.
It's not a bad thing. It is absolutely. It will slow the market down. It will slow down the inflation. It's not a bad thing. It's just a matter of being educated and knowing where your buying power is and where you're going to be should the interest rates. No, well, let's not say should. They are when the interest rates go up.
I have a question. I have a lot of my buyers ask me, they'll say, well, Angel, I want to wait till next year, till the values and everything goes down. What is your thoughts on that in our market? Do you think it's going to go down or?
No, just looking at the national statistics and what the National Association of Realtors is predicting for this year, we're not going to see pricing go down. So we're not going to see any depreciation, but we're not going to see the rapid appreciation that we've gotten over the last 2 years. So this year we should go back to our normal, modest appreciations and not see some of the high numbers that we have seen over the last 2 years.
And that's what I have told my buyers is they want to wait, and I said you don't need to wait. Let's get these. Get in while you get the low rates.
And again, this is just everybody has an opinion. Everybody knows that, and depending on who you're talking in the industry. So when I'm talking to my opinions, I'm just basing it on my 20 plus years of experience and what's going on in the market. I do feel like we're going to see more. Not necessarily foreclosures. I do think there'll be more foreclosures this year, but we're also going to see some more distressed properties. So that is something that we'll see. And I'm not saying it's going to be like it was in 2007 and 8. I don't think it would take a whole lot for us to get back to something like that again, but I do think we're going to see some more distressed properties this year. But in saying that too, not all distressed properties will qualify for a mortgage. So again, that's when you need to call and talk to Angel and find out exactly what kind of loan you qualify for and what condition the home needs to be in order to get a loan on it.
All right, guys, we're going to step away and take a quick break. When we come back on Real Estate Today with Cindi and Jody, we're going to take a chance to kind of figure out what all these predictions mean for you as a home buyer or a current home owner. This is Real Estate Today with Cindi and Jody on Talk Radio 102.3.
Have we given out the number to call? So guys, if you're wanting to call in, you can give us a call. If you have a question for Angel, you can call us at 267-1023. Again, that's 267-1023. Okay, so
Sorry about that. I was trying to subtly say like, "Hey, can you move?" Or Mike just.
You're fine.
and just so you know, these headphones are about shot, so they keep coming and going.
What?
They're frayed. They've been that way for a little while. So, and I've not let Jody touch these.
You have another set over there?
Here.
No, you're okay. It's okay. I'm not going to touch it. I just wanted Jesse to know so that.
Yes.
So if I start talking crazy, y'all, it's because I can no longer hear what's going on.
These things create bad hair days.
Yes, they do. They do.
Jack, you don't have to worry about that, do you?
I wear one every day. That's why my hair's so messed up.
So have y'all been hearing anything about more foreclosures?
I haven't. I've seen a lot of stuff selling out before foreclosure,
Right.
where they kind of know they're in a bad bind to start.
Right.
But I haven't seen anything making it. I don't know if they may come in and pass something that says, hey, we're going to do a foreclosure protection kind of grant set up once forbearance ends. So.
Oh, I hope we don't go back to the forbearance.
Oh, me too.
I don't see that our economy is where that would happen again, but yeah.
I think everybody just kind of threw it out just to see how the economy did, but I don't think we're seeing the big changes.
Right.
Enough to,
And one way that you can really find out about the foreclosures and how they look in your area is if you watch the local paper. So I know that over the last year, there's not been a whole lot of them that you've seen advertised, because anytime a lender gets to the point that they are now going to foreclose, they do have to legally run it in the paper for, is it 6 or 8 times before they can foreclose on it, which means it goes to the courthouse steps to be bid on. And if you look to see how many's in the paper, you can kind of keep track as those increase, because I know over the last month, 2 months, we have seen a pretty big increase in the amount of foreclosures that they're advertising in the paper. So that is always one good indication of how the housing market, foreclosures, distressed properties, how that's going.
I think so. I think one of the big things is just seeing, you watch a lot of stuff in the paper now has been past tax. Not been a lot on the foreclosure side, it's all been tax sell-offs.
That's, yeah.
And a lot of those are coming from the states too.
I was going to say, I think those are I've seen a lot of the states. Yeah.
Before you buy a tax sale, make sure you know what you're getting into. Make sure that you talk to an attorney and you know what kind of deed you're getting and what the rights are of the person that lost it, because they do have so long that they can come back. So it's not, you don't want to buy one that way and put a whole lot of money into it till you know that you have a clear deed. And if you have any questions on that, feel free to reach out to us at the office and we can talk about that a little bit more. And we're going back.
Welcome back to Real Estate Today with Cindi and Jody on Talk Radio 102.3. If you have real estate questions, call or text 267-1023. As always, we're live on Facebook this morning on the Richardson Group Facebook page. You guys are welcome to send questions in there. If you do happen to have a question that you would like to discuss off the air, 790-7979 is our office number, and one of our experienced realtors will be happy to help you with any questions that you guys have. Now, Angel, if someone wants to give you a call directly, what's the best way to get a hold of you?
My mobile, 423-421-7900.
So I know we kind of covered what we're expecting to happen in 2022. If I am a homeowner this year, and I'm looking at a move, having to move out of state, things like that, what are some things that I can prepare myself for? How do I need to kind of approach that scenario?
Well, as we talked the other day, if you've got a move coming in and you're moving from, let's just say, California, been an influx of Californians coming here. I mentioned to them that to contact me and let's talk about it, because we could actually do a second home program, and then they wouldn't have to quit their job before they leave, and we could utilize their current job to be able to qualify them, as long as they do qualify for 2 homes, or if they rent or whatever.
So y'all did hear that. If you are moving to the area from a different area, do not quit your job before you speak to a loan officer, because if you change careers, then that could affect your ability to obtain a mortgage.
That's right.
So you do want to make sure and talk to a loan officer about your options before you make the move. If you are moving more than 50 miles from your current home, then you need to talk to a loan officer. But and along those same lines, even if you're not moving out of state, you're still staying within the same area. That's a lot that we hear from people that are thinking about selling, is I'm worried, I don't want to sell because I don't know what my ability is to buy,
Right.
Or if I can find something to buy. So that is a huge hurdle that we have to get over with people right now, and there are options on the finance side. So one of the big things would be, a lot of sellers are not taking contingencies on the sale of homes, and you gotta kind of think about that, because if they're expecting a multiple bid or cash buyers, or you're competing with cash buyers, they're most likely not going to accept your offer if it's contingent on your home going on the market, getting sold, and actually closing. I'm not saying that they're not available, but that one is a little bit of a unicorn to find a seller that's willing to do that. But there are other options, like Angel was saying. So if somebody can qualify for 2 mortgages, then that is something that you would just go ahead and purchase the new mortgage. Now, if somebody wants to do that, Angel, how long can they lock their interest rate to? Let's say they want to put their home on the market. but they want to buy a little bit of time to get their home out there and possibly get it under contract before they close on the new one, then what is the average interest rate lock? And can you explain what an interest rate lock is?
Yeah, so you actually have different locks. You have 30-day, 45-day, 60-day. 60-day is the maximum lock that you can do unless you're buying a new construction, and then we do have a program where you can actually lock it for 180 days.
Okay.
Pricing's a little different. It's not, current day pricing.
Let's talk about the 60-day first.
Mm-hmm.
So if I am looking to sell my home, I can go ahead and begin the process of buying a home that I have found and go ahead and lock my interest rate for 60 days.
That's correct.
And that allows me time to possibly, so if I make my offer and I qualify for a mortgage and I'm locking my interest rate for 60 days, that gives me 60 days to possibly be able to get my home sold.
That's correct.
And maybe even close them back to back.
That's right.
So that I'm not having to go out there and compete with other people.
That's right, but you do have, keep in mind, you do have, when you close on a home loan, so you close in January, your first payment won't be due until March. So you have some time to get that home sold even if you close the home.
Oh, that would be awesome. Then that would give you a little bit of time to actually move.
That's right.
And get settled in, and you don't have to do everything in 1 or 2 days.
That's right.
That is actually a very good option.
Yeah.
So, that is definitely something to think about. So if I don't qualify or I don't have the money to put down to get ready to do that purchase without selling my home, then what would be another option that I might be able to do to come up with the down payment money?
Well, we've got several options, which we talked about this yesterday, Cindy. You could pull from a home equity line if you already had a home equity line on your current home.
Explain to people what that means, the home equity line.
So a home equity line is a money, could be a second mortgage, it actually could be a first mortgage, it could be either or, but it's just equity sitting there if you've gone to a bank and gotten a loan, sitting there that you can pull from for a down payment on another home.
So if I know I'm going to make $100,000 on my home when I sell it.
That's right.
I can go ahead and get that $100,000 out of my home, so that allow me to go ahead and purchase the new home.
That's right. You could, of course, you'd have to qualify, but you could talk to a home equity line lender and see if you can get a loan to be able to pull money from your current home to use that money to buy the home that you want to purchase.
Wow. Okay. Yeah. That sounds like that would be a great option. And then again, that would give me time to go ahead and close on my new home so that I know where I'm going.
Right.
And that allows me to take my time in moving if I choose, so that I don't have to be out of a home and in a home and everything all within 24 hours.
That's right. Right, gives you some time. There's also other options such as borrowing from a vehicle. Say you have equity. I mean, nowadays these dealers are begging for vehicles. So you can actually sell your vehicle. Had a borrower yesterday sell their car to CarMax. Different dealers are wanting vehicles because they're have a lack of them. So they can actually sell their car, or they can get a loan on their vehicle and use that for down payment as well.
Now, how do they source that? And what I mean by source that is, if I sell a vehicle and I'm all of a sudden putting $20,000 in my checking account, is that going to throw up a red flag whenever you go to look at my bank statements?
Yes, it does. They do have to document any source and document any funds deposited into their accounts.
Okay. And by sourcing it, if I show you where the dealership actually wrote me a check, or I have any paperwork, is that good enough?
That's correct.
Okay.
Sufficient.
Okay. What about if I have a relative who is going to give me the funds to be able to make my down payment?
Oh yeah, that's definitely doable. You just have to source it with a gift letter, and then your relative would need to provide a bank statement showing they had the funds available to gift you.
Okay.
Yeah.
So there's a lot of different options on down payment money for the new home right there.
That's right. There is.
Okay. And when you were saying the new construction, I know that whenever you go to build a home, you typically, or let's say you're buying a new home, not building, let's say you're buying a home that is under construction that the builder is in the process of building. Now, I can tell you that we do a whole lot of new constructions on our team. Not us personally, we work for builders, but one thing right now is builders are taking longer than usual, and even one of my fastest builders is still running into delays. I mean, it is crazy. Supply and demand is crazy out there. I mean, one day everything's fine, and the next day you've got windows that are taking 3 to 4 months to even get those in stock.
In ships out in the
Yes, yes. So if you are only doing a 60-day lock on my interest rates, then that could be a problem.
Yeah, that's why we have the 180-day extended lock for new construction, but it's for new construction only.
And that is that would be awesome, because even if your builder's telling you they're going to be finished in 60 days,
right,
you better prepare for some delays, because if you don't close, what happens to your interest rate? If it expires in 60 days.
Yeah, it expires, and then you just take whatever rate is available at the time. It hasn't been a problem over the last few years, of course, because our rates have stayed pretty stagnant, stayed the same, or even reduced. But this year we're going to see some changes, so we're going to be utilizing those extended lock programs.
So if we know the feds are meeting again in March, and we know that we are possibly buying a new construction that may not be finished until later in the year, now would be a good time to get in on that rate and lock it for the next 6 months.
Absolutely.
Okay.
Yes, absolutely.
That is a awesome program that you can actually lock an interest rate for that long.
Yeah. We have to watch it, because in the last year, I've not seen any of my new construction loans close on time.
No, I have not had one. I've had them delayed. Probably the average is probably 2 to 3 months, maybe even some of my slower builders that don't have larger crews.
Yeah.
I've seen them as much as 4 to, I think we had one even much as 6 months.
Yeah.
That fell behind. And in their defense, I know on one of them that we closed earlier, or end of the year there, the builder was actually going all over the place trying to find doorknobs. I mean,
Yeah,
doorknobs that they couldn't come up with them. I mean, that was amazing. And some of the things that they told me that they were having trouble with, appliances.
Yes.
I mean, appliances are very behind right now.
Very hard to
So y'all don't forget, you've got Whirlpool in Cleveland. So if you have any friends or anybody that works for Whirlpool, yeah, that's an excellent way to get some appliances too. But get that order in very early.
Yes.
Okay, so what does it mean? No, we talked about the points versus the percent.
All right. List price, buying power.
Okay. Second homes. If I'm looking to buy we'll talk about second homes whenever we come back then. So what that means and how you qualify for a second home.
All right, guys, coming up on real estate, we're going to cover all that stuff for second homes. Remember, 267-1023 if you have a question for Cindy or Angel today. We'll be right back.
Sorry.
You're fine.
I love that interest rate lock for 6 months. That is amazing.
Yeah, we haven't used it in so long that we hadn't needed it. How long has our rates been low?
Right.
But now it's going to come back, and we're going to be going gangbusters.
Well, and then you're not freaking whenever your new construction is not quite ready.
Yeah.
Because your interest rate is still secure.
I mean, the one across the street from me, they were supposed to close on the 3rd. They haven't even poured the driveway yet.
Yeah.
Oh, wow.
So now the weather's going to get involved.
Right.
With the lack of supplies.
Wow.
Yeah.
Yeah.
Yeah, and then with this weather, that definitely slows things down, and all of this wet makes it almost impossible for them to grade and get the yards in.
Mm-hmm. Yeah, it's bad. I know. We were out. We did a new construction tour yesterday, and a lot of them had been weather delayed. He'd been waiting on appliances for 4 months.
Wow.
And still hadn't gotten them in. They did a Whirlpool. There was a package. They were supposed to have had them in. Didn't get them in. Did another Whirlpool package. That one hadn't come in yet. So.
Yeah, I was just trying to plug Whirlpool
I've
there.
had people buy appliances on Facebook. Marketplace.
I had a new construction that we could not get the the dishwasher in. It was on back order. Could not get the dishwasher in, so we couldn't get the final appraisal without the dishwasher. You can't just have a big hole there.
No.
So I was kidding with the builder that I was going to buy one off Facebook and just push it in the hole and plug it up. I mean, you know,
They did.
avocado green dishwasher.
Hey, those are still running.
They absolutely are. Those are going to outlive all of us. And then
Harvest
worry about it.
gold.
Yes, yes. Did you know I bought my refrigerator the year my son was born? My son is 23, okay? And it is the most awful thing in the world. It is time to replace my refrigerator. And it is still in my refrigerator. It's not in my garage. It is in my refrigerator. It's to the point now where the trim was coming off of it, and Brian had put a piece of tape over it. And I walked by the other day, and he actually has replaced the tape with a screw. And I will be selling this luxury home next to this year. So if anybody needs a 23-year-old refrigerator, you are more than welcome to have it. It works wonderful. That thing will probably be working long after I am gone.
Oh, yeah.
But it would make a great garage refrigerator because, I mean, the older appliances just lasted forever. Whereas now, I think they last about 30 days after their warranty expires.
Yeah.
And they're
That's about
expensive.
it.
Yes, yes.
Welcome back to Real Estate Today with Cindi and Jody on Talk Radio 102.3. If you guys have questions, 267-1023 is the number to call or text here at the station. If you have a question you would like to discuss off the air, 790-7979 is our office number. One of our realtors will be happy to help you with any questions that you guys have. So we're here with Angel Sherlin. Angel, again, what's the best way to get a hold of you for anyone listening at home?
Be 423-421-7900.
So I know before we step away, we're getting ready to talk about second home purchasing, an investment style property, things like that. What are some of the tips that people need to when they go out looking to finance something like that they really need to pay attention about over buying a standard home?
Before you answer that, if I want to buy a home on the river or even up in the mountains for my family, how does that qualify for a second home? How far does it have to be away from my current home? I'm assuming I can't buy one that's just, 3 miles away.
Correct. So the second home is actually a 50-mile radius. So say you live in, say you live in Ottawa and you want to buy a home on the river. You can do that because it's actually considered a vacation type area. So there is a gray area, the 50-mile radius. And Chattanooga is a little different because we have the river running.
Right.
The river runs through it.
Right. We have multiple rivers in this area.
Right.
So we do have a lot of options for river properties.
Right. But say you were living in Appleton and you wanted to buy a house down the street 20 miles, you can't as a second home. It'd have to be on the river or in a vacation area, maybe in Ocoee, something to that effect.
Let's say that I have a current home and I'm not sure whether I want to sell it or not because my interest rate is wonderful. My payment is next to nothing. I have been paying on it for 10 years and I could possibly rent it, but I want to buy another home. Would the next home be a second home or can I still finance that as my primary residence?
No, you can do a primary residence. You can convert your current home to investment property and buy the primary residence, and you could actually use any rental income that you're going to get off of that home that you're going to convert into an investment to help you qualify.
Okay.
Yeah.
Okay. So I don't necessarily have to sell my home, and I know a lot of people that are looking to upsize. That's probably a good option for them,
Right.
especially if they have a smaller home that would make a good rental. It's a good way to prepare for your retirement. I mean, just let the home sit there and pay for itself.
Yeah, absolutely. There's so many options in regards to financing two homes that it'd be good to give a lender a call or give me a call so that we could talk about the options, because a lot of people don't realize that they may qualify for both.
Okay, and let's say I do want to buy one on the river. So how would that look as far as a second home? What can you offer?
Well, the second home option is 10% down. That's the minimum.
10%.
Yeah,
That
that's
is
the minimum
great.
down payment. Yes.
Okay, because
10%.
I thought I was going to have at least 20 or 30%.
No, 10%.
10%. Okay.
Yeah. So currently the rates are pretty similar to a primary residence, which, of course, rates are different for every loan program, but they're averaging somewhere around 3 to 3.25. So it's the same rate as the primary residence rate, so it's really good.
Okay. And then if I'm looking for a home on the river, let's talk about some loan maximums. And what does that mean by loan maximum? Okay, for starters, like on a FHA loan, what is the maximum limit in the area?
For FHA, currently it's $420,000, which just got increased recently.
Okay.
Which was in the.
But what does that mean? 420, does that mean I have to buy at least 420, or it is?
No, that's your loan amount. So
Okay.
the maximum loan amount is $420,000. So the sales price can be more depending on what you want to put down.
Okay, so if I want to do 450, if I put $30,000 down, then my FHA loan is based on the 420,
That's
which
correct.
is the maximum amount.
That's correct.
Okay.
Yes.
And then for homes like on the river or vacation properties and things, what is the conventional limit?
The conventional just got increased to $647.
Wow.
Yeah.
Okay, so a maximum loan amount of $647.
Now you can go over $647.
Right.
We can go into
Well, as a second
jumbo.
home, you're going to
Yeah.
put at least 10% down. So that puts you up to what, about 700? Then put 10% down, which brings you to the 647. Correct?
Right, and you're not limited to 647,000. That just means you're going to get the normal conforming interest rate.
Mm-hmm.
If you go over the 647, no problem. It's just the rate is a little bit different on they call it a jumbo. Anything over.
And what does that rate look like compared to these wonderful rates that we're hearing on FHA and conventional right now?
It's not a whole lot different. You're still less than 4%, depending upon your credit score.
Okay.
Mm-hmm. Yeah.
Okay. Well, and along those same lines, because what about investment property? Like if I'm looking to buy a rental, so with that, how does that interest rate and down payment look?
The rental properties or on a single family unit is 20% down.
Okay.
And those rates are typically between 1 and 1.5% higher than your current rate. So you're probably looking at somewhere in the 4s. And it's all dependent upon loan amount, sales price, credit scores, that kind of thing. But it's not a tremendous increase.
That's not bad at all, because I know that some of the investment properties that I have that I financed back in 2005 and 6, I'm ashamed to even say this, but I think that they are in the 6s.
Yeah,
So-
they were higher back then.
Right, and I've just never done anything about it.
Well,
but,
we need to refi.
yeah. Well, and that's something that we talked about a couple of weeks ago was investment property. So if you currently own investment property, it's not a bad idea to go ahead and refi those and pull your money out at a lower interest rate, and then that gives you cash to be able to put down payments on additional properties.
That's right.
Especially if you have one that is cash flowing really well right now.
Yeah.
Because that is another prediction, is that we're going to see rents stay very stable with increases over the next 12 months.
Yeah.
So again, those are predictions. I mean, none of us have a crystal ball. I mean, we didn't see 2007 coming, now did we?
That hit us like a ton of bricks.
Boy, didn't it?
I know they're talking national rent on average has gone up 19% over the last year.
What has the average
National
rent?
average.
Wow.
Yeah, I just rented. Brian found me my renter for my little 2-bedroom, 980 square feet, 2-bedroom, 1 bath, $1,200.
Wow.
Yeah.
That.
But there's nothing out there. I mean,
Right.
We have low inventory, so
Right.
she couldn't find anything. She actually works in downtown Chattanooga, and then I have a home, the rental property in Cleveland. She drives all the way to Cleveland just to find a place to live.
We are seeing a whole lot of people, though, going to the distant suburbs now.
Mm-hmm.
So, and I think that is one thing that the pandemic has done too, is especially with the younger generations, they were all about walking scores and being downtown and being very close to everything in smaller living space, and now we're seeing people that want to go out and have a little bit of land, a little bit of elbow room, and not quite in that downtown area. So I think over the last year I've sold more land and homes with land than I probably have in my entire career.
Yeah. Yeah.
So, and I mean, that's not a bad thing. It's really pushed us into other areas. And also that has to do with affordable housing, because you can go out into some of these outlying areas and get a little more house for the money too, which opens up your USDA loan. So you want to talk a little bit about what a USDA loan is?
Yeah, so that's a rural development loan set up by the government to help buyers in the rural communities buy homes. It's an actual 100% financing. You do have income limits on that. It all depends on what your household looks like, but just from a 1 to 4 unit household, you're looking at about $90,000 on the lending limit for that. So your income can't be more than that. But it's a great program because if you can get 100% financing.
Do I have to be a first-time home buyer?
You do not have to be a first-time home buyer for that program.
Okay, and just to clarify, in the mortgage industry, what does first-time home buyer mean? That's not really, you don't have to be a first-time home buyer, do you?
Well, that just means that you've not owned a home in the last 3 years.
Okay, so if I have not owned a home, been on a deed in the last 3 years, I am now a first-time home buyer
That's
again.
Seems kind
Wow.
of crazy, but yep, that's what they code
Wow.
the first time. Mm-hmm.
So, but if I have a home that's paid for and I'm on the deed, I'm not a first-time home buyer, right?
That's correct.
So it has to be not on a deed in the last 3 years.
That's correct.
Wow, okay.
Yep, that's correct. Now, USDA does say they have some exceptions, so you're not supposed to be owning another home. You can sell a home and go USDA, but they do have exceptions for owning another home, and you can still do the USDA loan program.
Wow, okay. And then what are interest rates right now on a USDA loan?
Those are running anywhere between 2.75, 3%, just depending upon credit scores.
So a buyer can do 100% loan at less than 3% interest right now.
That's
if
right.
they are buying a home out in the county.
Yes.
Wow. And then are there other limitations on that as far as what I can and cannot buy? Like, how much land can it actually have with it?
5 acres is max.
Okay. And then can I have a barn, a pool,
Sure.
anything like that?
Yes, you can. You
Okay.
can. They don't limit that anymore. That used to.
Okay. Okay.
Back when we
Well,
first
and
started.
with any type of loans like the FHA, the USDA, the VA, any of those, how much land can you actually get with one of those types of loans?
Well, VA is a little bit different. They don't really limit you. It's all about if you can find comparable sales on
Okay.
that. It's the USDA that wants to limit you on the amount of acreage that you purchase.
Okay, but on VA, the land can only be a certain percent of the overall value,
Yeah,
correct?
anywhere between 35%.
Okay,
So
okay.
you can't be real top heavy on the
Right,
land.
so I can't get 100 acres with a 1,200 square foot home.
No.
Right,
No.
so the land can only be 35% of the value of the total price.
Right, but maybe
So,
we can survey off the rest of it.
Yeah, if you remove the land, yeah, that's a thought. Or there are other programs out there that might be a little better for that.
Yeah.
All right, we're going to step away and take a quick break. When we come back, we're going to finish talking about the different types of loans out there and if there is anything out there available for a lot of the first-time home buyers, which is a big topic, and also the lack of affordable housing in the area. This is Real Estate Today with Cindi and Jody on Talk Radio 102.3.
Now, I wasn't really aware that VA and USDA would allow that much now. So I didn't really know that you could do that much land with those type of loans now.
Yeah,
So
they
that's
changed
good
it.
to know.
FHA is what, 5 acres, or is that just THDA?
Or is it based on percent?
Yeah.
What does FHA have a limit? So no
It's
limit,
just really just a matter of
the percent of the value.
the percent of the value.
Yeah, so I
Okay.
had to have-
Is it the appraiser that determines the percent of the value, or is it some kind of formula that they
Well,
use?
it'd be what you would actually, if say the house was worth, or the property, you were going to put it on the market for $500,000, then the land can't be worth more than 30% of the total value.
Okay.
So you could figure that out by doing your CMA, take your CMA, and then
Okay, and then USDA allowing pools and things now.
Yeah,
I
they
didn't
do.
realize
They
that.
sure do.
So are they going to deduct that value from the appraisal, or is it okay to
No,
give that item
well,
of value?
I guess it depends on the appraiser on that.
Okay.
You know how they are
Appraisal is something that we probably should talk about in the next section real
Yeah.
quick. What do you
a
think?
little bit.
Okay.
Can we talk about too closing costs?
Oh,
Set
good
paid by
one,
seller.
good one, good one.
Yeah, where are we at on that? I get that question every day.
Okay, we said closing costs, and what was the other one? What did I just say?
Appraisal.
Appraisal.
Okay.
Appraisal information. And then we want to talk about manufactured homes. Those are big.
Sure. Yeah.
I have about 5 going right now.
Yeah. Hey, do you require a structural engineer report?
Not unless the appraiser requires it.
Okay. Well, just keep in mind that we only have 6 minutes on this last one.
Okay.
Then we'll go appraisal, that, and then just touch on
Okay. You wanna do-
manufactured report alone.
Appraisals, closing cost mobile home, or closing cost appraisal mobile home? Let's hit appraisal first.
Yeah.
Appraisal, closing cost mobile home.
And mobile
That way, because
Unless we lose time.
yeah. And if y'all have any other questions about any of these topics that we're going to be talking about, if you are buying or selling a mobile home or looking at one, then you can always give us a call at the office or give Angel a call. Angel, what was your number again?
423-421-7900.
Yeah, and Angel is with CMG Mortgage, so she has multiple offices around the area. Okay, we still got a minute.
Yeah.
So, and mobile homes, and we'll talk about more of this on the air, but in case we do lose, we run out of time, you do want to make sure that they're on permanent foundation. So, and if you don't know that, make sure and ask or give us a call, or your agent.
Welcome back to Real Estate Today with Cindi and Jody on Talk Radio 102.3. If you have questions, call or text 267-1023. As always, we're live on Facebook this morning. And if you have a question, you can reach us at our office, 790-7979. We would love to be able to help you with any of your real estate needs. So, ladies, real quick, we had a change in plans. We got talking during the break. Covering some appraisals, getting back into things, dealing with home buying, things that are going to have a big effect on what you can buy, what you can't buy. Let's talk a little bit about appraisals. Dealing with the different types of loans.
Are you seeing a whole lot of appraisals coming back short?
I had not,
By short, I mean not at the purchase
not
price.
at the value.
Correct, but coming in below value.
I had not until just recently.
Mm-hmm.
So we've seen just a little bit of a correction. So recently I've had just a couple come back
Right.
less than
And
list
again,
price.
just my opinion is I feel like we're going to see more of that going into this year, because up until now we've had a whole lot of bidding wars and everything's been increasing as we go, and as things kind of level out this year and we're not seeing those big increases, you're still going to have people with the mindset that those increases are still going on, and that the appraisers are not going to be able to support that with sales that are comparable to yours. So in a perfect world, an appraiser is going to find 3 homes that have sold in your subdivision or very similar area. So they want location, condition, and age of home. And that is, so if your neighbor's home, which is almost the same as yours, sold for $200,000 last month, you can bank on your appraisals probably going to come back at $200,000.
Yeah.
So, and then let's talk about closing costs. So we've got these wonderful interest rates right now. Closing costs are the cost that it costs a buyer to get into a loan. So a seller has their own set of closing costs, and then a buyer has their set of closing costs. And a buyer's closing costs, the majority of those are going to come from the loan, your inspections, getting your homeowner's insurance set up, things like that. So what kind of closing costs are we looking at on some of these loans?
Well, you can average it out. You know, the higher sales price is somewhere in the $400,000 to $500,000. Closing costs are going to be about 2%. Anything under $200,000, you're probably looking at about a 3% on closing costs.
Okay. And then is that just closing cost? And when you hear somebody say prepaids, what are prepaids?
Prepaids are your property taxes, your homeowner's insurance, and any interest due. So if you close on a loan, in the mid-month. Interest will be due till the end of the month, and so you got to collect the rest of that interest for the month.
So what prepaids are is your lender is going to make sure that your property taxes and your homeowner's insurance are getting paid every year. So in order to make sure they're getting paid, they are going to charge a little extra on your loan, and they're setting that money aside to make sure that your taxes and your insurance are paid, because they want to make sure that they are protecting their investment too. So they want to make sure the taxes are paid so that the state is not taking your home back. And they want to make sure that you're insured so that if you have a fire or something, they know that their investment is secure. So that's what your escrow accounts are, and your prepaids set up your escrow accounts. So again, you said on a home that is under 200, we would be looking at about how much?
About 3 to 4%.
Okay.
It just all depends upon how much your property taxes are running and your homeowner's insurance.
So when you say 3 to 4%, you're talking about closing costs and setting up your prepaids.
That's right.
Okay.
So, and it's variable, like I said, depending upon what the actual costs are for your taxes.
And what are some of these closing costs used for? I'm assuming that one is going to be your appraisal.
Yes, and speaking of appraisal, those have gone up on pricing recently.
I saw that. I started looking at different
and we
reports.
have appraisers that don't take appraisals. They'll turn them down. So they're on rotation. So when we place an order, it goes out to bid, it goes out to rotation, and then an appraiser will say yay or nay and can turn it down. So we have to keep asking. Okay, so in the rural areas, we're having trouble with appraisers actually picking up and doing it just because they're so busy.
So you have to offer more money to get them to do it. So that makes sense. So like in every other industry right now, they are so overwhelmed that they're picking and choosing which ones they're doing. So the lenders are charging more on the appraisals because they're offering the appraisers more to get them to actually do it.
That's right. And to do it in a timely manner.
Right. That's very important.
Yes. Yeah, it's tough right now. I mean, we close all of our loans in 30 days, but it's all hands on deck to get it done in 30.
Right. And then when you were talking about it goes out, so when you order an appraisal for a buyer, so it's then sent to a third party?
It is sent to an appraisal management company.
Yeah, and this is all courtesy of 2007 and 8.
Yes.
So the third party then assigns it to a
appraiser
panel.
That we have set up for our company. You have different appraisal panels.
So your panel is all of the appraisers in the area that you have approved.
That's correct.
Okay.
That's correct.
And then somebody from that panel is then going to accept it.
That's correct.
Okay.
And then they'll schedule it with the listing agent. And then we are not allowed to know whom that is. So,
right. And we don't know until they call to schedule the appointment.
That's right.
Okay.
Yeah. So we don't typically know until we get the copy of the appraisal.
Okay, that makes sense.
That started in 2008. They don't want us to know.
Right. The appraisers don't want to be held liable if the market were to go back down again.
Yeah.
Which I don't think we're going to run out of time here, but what are you seeing different now than what you saw in the peak of the market as far as loans and stuff from 2005 and 6? Because we know that in 5 and 6 we were doing some loans that were a little less than.
Yeah, so, of course, they've changed what it takes to get qualified. So it's tougher to get qualified on conventional loans than it was before. They've tightened up just because we've got such a low interest rate and pricing. So
we're not seeing some of the crazy loans that we were seeing back then.
No.
So, and so people that feel like the market's going to crash, we're not going to